Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. So what happened in the market last week? Let's take a closer look. This was a negative week for equity markets across the globe, except for Chinese blue chips. The U.S. equity markets experienced a downturn, with the S&P 500 declining by 1.97% and the Nasdaq Composite falling by 3.65%. The Dow Jones Industrial Average, however, managed a slight gain of 0.72%. The Russell 2000 Index, a benchmark for small-cap stocks, rose 0.49%. The rotation into value and small-cap stocks continued, indicating a shift in market sentiment and a shift towards sectors expected to benefit from potential interest rate cuts. European markets also faced pressure, with the Pan-European StoxX Europe 600 index dropping 2.68%. Japan's Nikkei 225 index fell by 2.74%, amid concerns over tighter U.S. restrictions on semiconductor technology exports to China, which affected several Japanese tech stocks. The broader Topix index also saw declines, reflecting overall market weakness. Chinese equities had a mixed performance. The Shanghai Composite Index rose by 0.37%, while the blue-chip CSI 300 added 1.92%. However, the Hong Kong Hang Seng Index fell significantly by 4.79%. The Japanese yen strengthened against the US dollar for the second consecutive week after recent suspected yen-buying operations by the government. The British pound increased slightly against the US dollar, closing at 1.30, up from the previous week. The euro saw a modest gain against the US dollar, ending the week at 1.09. Oil prices declined. This drop was influenced by concerns over global economic growth and potential decreases in demand. Gold prices saw a minor decrease. The second week of quarterly earnings season produced an uptick in expectations. Analysts now expect S&P 500 companies to post an average second-quarter earnings increase of 9.7%, up from the previous week's forecast of 9.1%. In a week of volatile trading, the SIBO Volatility Index, VIX, which measures investors' expectations for short-term market volatility, surged 32% to its highest level since April, reflecting heightened market uncertainty. The economic calendar generally surprised on the upside. Retail sales, excluding gas and auto segments, jumped 0.8% in June, well above consensus and the highest since January 2023. Building permits rose 3.4% in June, ending 3 consecutive monthly declines. Industrial production increased 0.26% in June, and the Philadelphia Fed's gauge of regional business conditions reached a 3-year high. The Labor Department reported an increase in weekly jobless claims to 243,000, a 9-month high. Continuing claims rose by 20,000 to 1,867,000, the highest since November 2021. Fed Chair Jerome Powell noted that inflation and labor market conditions are in much better balance. The yield on the 10-year Treasury note fluctuated but ended the week lower. The European Central Bank kept interest rates unchanged, with President Christine Lagarde indicating a wide-open decision for September. The ECB survey showed increased household loan demand, suggesting optimism in the housing market. Euro area industrial production fell 0.6% in May, with significant declines in Germany, Italy, and France. UK inflation remained steady at 2%, with core inflation at 3.5%. The labor market showed resilience with strong average earnings growth. The yen strengthened amid suspected government interventions to curb excessive volatility. The nationwide core CPI rose 2.6% year-on-year in June. The government revised its GDP growth forecast for the current fiscal year down to 0.9%. China's GDP grew 4.7% year-on-year in Q2, below expectations. Retail sales and industrial production showed mixed results, highlighting ongoing economic challenges. New home prices continued to decline, reflecting ongoing issues in the property market. What to watch this week? The upcoming week is filled with crucial economic data releases, ongoing CNP company reports, and significant political developments in the US following Biden's withdrawal. These factors could greatly impact market sentiment and drive volatility. Here is what to keep an eye on. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.